All right, let's get right into it. The Indian stock market has kicked off 2026 with an absolute bang, hitting record highs literally from day one. But what's really fascinating here is the story behind the numbers. Who's doing all the buying, and more importantly, who's doing all the selling? We're going to unpack this whole situation.
So, this is the number that's got everyone's attention. In just the first week of the new year, the Nifty index closed at a brand new, all-time high of 26,328. You know, that's more than just a good start. It's a massive statement of intent, and it really sets a powerful, bullish tone for the year. But here's where it gets interesting, kind of like a mystery. See, while the market is soaring to these new heights, a lot of the big overseas funds, the foreign institutional investors, are actually selling off their Indian stocks. So what gives? That creates this huge question mark, and it's the puzzle we're going to try and solve today. Okay, so to really get a handle on what's happening, let's first rewind a little and break down the actual numbers from that wild, record-setting first week of trading. And it wasn't just the Nifty, not by a long shot. The Sensex also had a stellar week, jumping up 573 points to close at 85,762. The really important thing here is that this wasn't just a couple of big stocks pulling everything up. Nope, this was a broad-based rally, which tells you there's some real widespread confidence in the market right now. So where did all that momentum come from? Well, the charge was really led by some of the heavy hitters, especially in the metals and power sectors. We saw some amazing performances from companies like Coal India, which shot up 7%, and NTPC, which was up almost 5%. This shows that the optimism is coming from the core, nuts and bolts of the economy. Which brings us to the main event, really. We've got two massive opposing forces that are just battling for control of the market. I like to think of it as a huge investor tug-of-war. Okay, so picture this. On one side of the rope, you have the foreign institutional investors, the FIIs. On January 1st alone, they sold off and pulled out over 3,200 crore rupees. That is a lot of money. But on the other side, pulling back hard, you've got the domestic institutional investors, or DIIs. They came in and bought over 1,500 crore rupees worth of stock, basically soaking up almost half of that massive selling pressure. And believe me, this isn't just a one-day thing. The key here is that foreign investors keep selling, but that selling is being met head-on by serious domestic buying power. And that buying is being fueled by a lot of optimism about the upcoming company earnings reports for Q3. It's this classic showdown, global caution versus local confidence. So if this tug-of-war keeps going, what's going to be the tiebreaker? Well, just like in any good detective story, we've got to look for clues. And this week, the economic calendar is just littered with them. So traders and investors are going to be glued to their screens on a couple of key dates. First up, on January 7th, we get two huge clues, the M3 money supply and the super important GDP growth figure. Then, on the 9th, we get a closer look at what the banks are doing with deposit and loan growth data. Each one of these is another piece of the puzzle. Let's talk about the big one, though, the fiscal year GDP growth. This is really the ultimate report card on the country's economic health. Right now, the market is betting on a pretty solid number, somewhere around 6.5%. Now, if the real number comes in higher, well, that could give the domestic buyers a whole lot more rope to pull in that tug-of-war. But if it's lower, that might just give the foreign sellers the edge they've been looking for. Okay, so we've looked at the record highs, we get the whole investor tug-of-war thing, and we know which economic clues to watch out for. So now, let's put it all together and see what the experts are actually forecasting for the week ahead. Right, so what are the analysts saying? For the Nifty, they expect things to kind of move sideways for a bit, probably in a range between 25,700 and that recent high of 26,300. But, and this is a big but, if that positive energy keeps up and it breaks past that high, the next stop could be 26,500. For the Bank Nifty, the magic number to watch is 59,500. A strong push above that could send it right back towards its own record high. And you know, this positive outlook isn't just about technicals on a chart. The bigger picture, the overall feeling is still incredibly positive. And it's all being fueled by hopes for potential RBI deregulation, ongoing economic reforms, and even talk of a major trade deal with the US. These are the big stories that are keeping that domestic confidence so high. So all of this leaves us with one final and really fascinating question. For years and years, the flow of foreign money was one of the biggest things that moved the Indian market. But now, with domestic buyers holding the line so strongly and even pushing the market to new records, you have to ask,
Is the Indian market finally becoming self-reliant? Is it writing its own rules for 2026? Now that is the story to watch.